Welcome to our Junior Doctor Hub. I am Jade Pang. Today, I'm going to talk about some tax basics. It is often believed that we pay a set amount of tax based on our earnings. However, this is not the case. A taxpayer pays tax based on a stepped scale, so there is an average rate of tax that you pay rather than a set amount dependent on your income level. There are different tax brackets, and each bracket has an associated tax rate. The first of those brackets is tax-free, so you can say that you do not need to pay any tax on the first $18,200 that you earn. So this table summarizes the resident tax rate for the current financial year, which is the 2021 financial year. You can find this in the article as a description of this video. Please note that in addition to these rates, you'll still have to pay an extra 2% of Medicare levy as part of your income tax return. We just want to quickly go through the table. For example, you may think that once your taxable income exceeds $180,000, you pay 45 cents of tax on each dollar you earn. However, this is not the case. For example, if your annual taxable income is $200,000, the total tax payable is actually just over $60,000. You can say that the total tax payable for the first $180,000 is just over $50,000, and then you pay tax at 45% for the $20,000 that is over $180,000, which means that your average tax rate on your $200,000 of taxable income is actually 30%. So for a taxable income of $100,000 for the year, your total tax payable is $22,967, which you can say this is a calculation. The next topic, people often say that I will get a tax deduction, but what does this mean? Tax deductions are the number one way to increase your tax refund. But how do tax deductions work? Well, most work-related expenses may be claimed as tax deductions. Other expenses such as income protection insurance, tax agent fees, donations are also accepted by the Australian Taxation Office. Those expenses can be claimed at tax time and will reduce your taxable income. However, just because you have spent money on a tax-deductible item does not mean that you will receive the full amount back as a tax refund. The amount you will receive depends on your marginal tax rate. For example, your taxable income is $100,300. Based on the calculation that we covered earlier, your total tax payable is just over $23,000. And for example, if you purchased a work-related item and that costed $300, it would reduce your taxable income by $300, and now your taxable income is $100,000. And the total tax payable based on $100,000 is actually just under $23,000. And you can say that the total tax saving is $97.50, which means that you spent $300, but you can only get $97.50 back as a tax saving. So generally, it is advised that before you purchase some work-related equipment, you buy it because you really need it for work, not just for the tax savings. Thank you very much for today's video. You can find all the content and tables in the article in our Junior Doctor Hub. See you next time.